Welcome to Speidel's California Minute. I'm your host, Catherine Zidane, and this week we're covering the pass-through entity elective tax and how it intersects with non-resident withholding requirements. We'll be covering tax issues facing non-residents at our 2-hour webinar, Non-Residents, How to Become One and What's Taxable. You can sign up for the live session on July 13th or register for the on-demand version at caltax.com under the Webinars tab. The pass-through entity elective tax is in addition to any other tax or fee that a pass-through entity may be subject to, including non-resident withholding. There's no provision that reduces the non-resident withholding required for distributions to non-resident shareholders, partners, or members that consent to having the pass-through entity elective tax paid on their behalf. This means that if an entity elected to pay the pass-through entity elective tax and distributed all of its net income, the non-resident owner would essentially pay 16.3% in withholding to California on that income, which is 7% non-resident withholding plus 9.3% pass-through entity elective tax. The non-resident withholding credit is treated in the same manner as the other state tax credit for the purposes of credit ordering. Because SB 113 changed the order of the credits beginning in 2022, the pass-through entity elective tax credit will now be applied after the other state tax credit and the non-resident withholding credit. Because the FTB is not allowing a reduction of non-resident withholding for taxpayers who have consented to have the pass-through entity elective tax paid on their behalf, the non-resident withholding will significantly reduce or eliminate the tax that the pass-through entity elective tax credit would apply to. This is unfortunate because non-resident withholding is refundable, but the pass-through entity elective tax credit is not, meaning these taxpayers could forever lose the benefit of the pass-through entity elective tax credits they paid for. Non-resident pass-through entity owners should request withholding waivers or consider not electing to pay the pass-through entity tax for 2022. The FTB won't approve a waiver of the non-resident withholding requirement for entities solely because they've elected to pay the pass-through entity elective tax on behalf of their non-resident individual owners. But there are some situations where taxpayers may qualify for a waiver. The FTB generally grants a waiver in any of these cases. The non-resident consistently files California returns and makes estimated tax payments. The non-resident is a partnership or LLC that will withhold on its distributions. The non-resident is included in a group return. The non-resident non-qualified corporation is included in a combined reporting group with a corporation that does have a permanent place of business in California. The non-resident is a newly admitted investor, for example, an S-corporation shareholder admitted after the end of the taxable year. The entity is a publicly traded partnership. The non-resident can demonstrate that the 7% rate will result in overwithholding. An LLC member could be subject to overwithholding because the LLC member failed to sign Form FTB 3832, Limited Liability Company Non-Resident Members' Consent, and the LLC will withhold based on Revenue and Taxation Code Section 18633.5, or the entity is encountering administrative problems setting up the withholding program. The most common scenarios that might apply involving the pass-through entity elective tax would be demonstrating that the non-resident consistently files and makes estimated tax payments, and or where the non-resident can demonstrate that the 7% rate will result in overwithholding. Keep in mind that payees have to file Form 588 at least 21 business days prior to the expected payment, so the FTB can issue a determination letter before the withholding is due. Taxpayers considering waivers should submit their requests as soon as possible. Stay up to date with California state tax news with a subscription to Speidel's California Tax Letter, which also includes access to Speidel's Strategic Tax Advisor, which provides quarterly analysis for business and high net worth clients. Get more details on this subscription at caltax.com under the Publications tab. That's all for this week. Join us next time for another episode of Speidel's California Minute.